Hi, this is Rob Warlow from Business Loan Services and welcome to our weekly Business Finance Bulletin. If you're watching last week's episode, you'll know that I was in Malaysia. Well, I'm back in the UK, came back on Tuesday evening and came back with a stinking cold, which I guess is the result of sitting in an airplane with many hundreds of people. But hey, so here we are back behind the desk and here again to share with you some news of what's going on in the business finance world. So I've taken a look at a survey that recently came out, carried out by the SME Finance Monitor team. Now this is a quarterly survey that's been coming out since 2010, and so it's building up a very good picture of how businesses are raising finance and dealing with banks. Now if you've watched previous episodes and also read my blog, you know one thing that I've been recently looking at are these media headlines that banks are not borrowing money and it's all a big problem, etc. Well, in last week's episode, I looked at some information that came out that it showed that banks are actually increasing the amount of money that they're lending. It's a very clear trend. But something else that's coming out as well is the fact, you know, that many business owners don't wish to borrow money. I mentioned in previous episodes about a YouGov report that recently came out that showed that 64% of business owners are not interested in borrowing. And this trend also came out in the SME Finance Monitor report. So for quarter three, it asked its businesses that they were surveying, you know, how many of them want to borrow money, and 78% of them said, we're not interested. So that's nearly 80% of business owners not interested in borrowing. Now it may be that they want to concentrate on just reducing their debt levels, or it may be that they're fearful of the economy generally and they don't want to enter into new borrowing commitments. Another element that came out within the report kind of backs this up as well, in that for quarter three it asked how many of the businesses surveyed had a borrowing event, and a borrowing event defined as somebody who's put an application in or had an automatic renewal of an overdraft limit. And only 15% of business owners said they had one of those events. And that figure is at an all-time low. It's never been that low. So there's a clear trend of a lack of appetite amongst many business owners about borrowing money. Another interesting thing that came out, and one thing that we've looked at before, is usage of credit cards. Now, at the end of 2012, the SME Finance Monitor team found that 15% of business owners were using credit cards. Now that has gone up to 20%. So 20% of business owners using credit cards in order to fund short-term cash flow gaps. Now again, we've looked at this before, and whilst I get it, because it's an easy way of just paying bills, etc., you've got to be very disciplined to make sure that that debt is paid back, because it's an expensive form of borrowing, and if you're not careful, it's a lump of debt that just never goes away. So some interesting findings in that report. Had a phone call this week from a business owner who's been pressurized by his bank to convert his overdraft balance onto a loan account. Now it's not unusual, and some of you actually may have encountered that, but why is this? What's the problem? As you may think, listen, I've got no problem, I've not had any bounce checks, I'm keeping within my overdraft limit, so what's the bank's concern? Well, if you look at what an overdraft limit is for, you know, an overdraft limit is really a bridging facility. It's there to bridge the gap between the time that you have to pay your suppliers and the time that you get money from your customers. And you may have a funding gap. And so an overdraft limit is really only designed to bridge that gap. But what you find is that sometimes the balance doesn't swing quite as much as it should. And what you'll find is that you have a lump of debt below which a balance you never go below. So let's say you've got an overdraft limit of say £20,000, but your lowest balance at any one time, say, is 17,000, and the highest you get to is 18. And so you're only swinging between 17 and 18k, and the 17k of debt you just never touch. That's the bit that concerns the bank. It's called a hardcore borrowing, a hardcore debt, and that's really what they want to get rid onto a loan account. Now this debt may have come about because of perhaps accumulated past losses, or it may be that you purchased fixed assets through your overdraft limit, which is never a good idea. And so the bank just said, let's recognize this fact, this debt is never going to go away, and let's put that to one side on a reducing loan. Now it actually makes sense, but of course the problem you may have is that it actually increases your monthly outgoings. Now on the loan account you've still got interest to pay every month, just as you did on your overdraft, but now you're having to find the money in order to pay back the capital on the loan. to make sure that the loan is extinguished by year 5 or whatever it may be. So it is going to increase the cash going out of your bank every month. So you have to budget for that, or you need to sit down and try and convince the bank that you're going to try and make sure that the overdraft usage on an average basis is going to be reducing over a period of time. So putting a convincing plan together for that. If you need help on that, of course, just give us a call and we'll see what we can do for you. So what's the business finance tip for this week? Well, it's all wrapped around succession planning. Now, when you're going into the bank to look to borrow money, one of the areas they're going to look at is you. They're going to say, are you the key person within this business? Are you the key driver? Now, if you're a one-man band or head of a smallish company, but it's clear that the business totally revolves around you, that's a risk for the bank. It's not only a risk for the bank, it's a risk for your business as well. Because the bank wants to know, if something happens to you, whether, God forbid, that's death or long-term illness, what happens to the business? Can the business continue to afford to pay back the loan every month? And so the bank wants to be satisfied with, what is your succession plan? What's your backup plan if you're not there or you're away from the business for a prolonged period of time? Is it that you've got a trusted second-hand man there, somebody behind you who can step in? Or is it going to be a fact that, well, we may just have to move the business on and get an external manager in, somebody new to the business? Whatever it may be, you need to think about this issue anyway. Even if you're not borrowing money, succession planning is important for any business. So if you're putting a business plan together, an application for the bank, and you think that's going to be an issue, where it's clear that you are the main man or the main woman within the business, tackle the issue head on and explain it away in the business plan and application. So succession planning, important for any business. Have a look about how it can affect you. So that's it for this week. I'm back next Friday, and of course it's the last Friday before the Christmas period and the New Year, so we'll be taking a short leave of absence. So look forward to being with you next week. So have a great and profitable weekend and a great and profitable week, and I look forward to being with you again next Friday. Thanks very much for watching.